Hey guys, welcome to my YouTube channel. In today's video, I will be talking about top-down analysis in price action trading. My name is Emmanuel Undu. If you're meeting me for the very first time, do help to hit the like button, subscribe, and also turn on the post notification bell icon so you don't get to miss our upcoming videos. Without further ado guys, let's head on to the charts. Welcome to my channel. Today we'll be discussing top-down analysis in price action trading. Top-down analysis is a popular method used by forex traders to analyze the financial markets and make informed trading decisions. By examining multiple time frame of candlestick charts, traders can gain comprehensive understanding of the market and identify potential trading opportunities. So if you can see a higher time frame move on a lower time frame and then capitalize on it, then you have good move for yourself. The first step in technical analysis, top-down price action trading, is to first of all identify the long-term trend of the market, and this is done by analyzing the monthly or weekly time frame. The long-term trends provide big pictures view of the market and help traders understand the overall direction of the market. Once the long-term trend has been established, then traders can move down to the daily time frame to look for trading opportunities that aligns with the long-term trend. So if you've checked the direction of the trend of the market on a weekly time frame, as you can see here, the market is pushing to the upside on a weekly time frame. We can go down to the daily time frame to get informed trading decision. So here you can identify the market in this range, in this trading range. On the daily chart, traders will look for bullish candlestick patterns in an uptrend or bearish candlestick patterns in a downtrend. For example, if the long-term trend is up, traders will look for bullish reversal patterns such as hammer or engulfings. If the long-term trend is bearish, traders will look for bearish reversal patterns as the hanging man or shooting star patterns. Alright, so at this point here, we will be looking for reversal patterns. Okay, we are looking for reversal patterns at point of resistance or support. Okay, so once we get to this point, somewhere around here, we then look for reversal patterns to push the market down to its low. Or from this top here, you look for reversal patterns to push the market down to its low. Or from this bottom here, you look for reversal patterns to push the market up onto its high. So finally, traders will move down to the hourly time frame or the 15-minute time frame to fine-tune their entry and exit points. This could involve looking for reversal patterns or support and resistance levels. And if you don't know how to get support and resistance levels on your chart, do well to watch my previous video on understanding support and resistance trading. So the link should be in the description section or somewhere around the video. For example, if a bullish reversal pattern has been identified on the daily chart, traders will then move down to the hourly chart or the 15-minute chart to look for confirmations of the patterns. This could involve looking for a bullish engulfing pattern or a break above a key resistance level. So right here, we go down to the 15-minute time frame or the hourly time frame. I'll prefer the hourly time frame for this. Why? Reasons because the hourly time frame gives little to no fake outs. So if the market is closing above, then it's strongly closing above. Okay, so here we have the hourly time frame. So here we are looking for reversal patterns or break above or below key levels. Okay, so we are looking for reversal patterns or break above or below key levels. Okay, so here is a break below a key level. We could look to enter and then our stop loss just slightly above this level. Okay, and then on reversal patterns, here is also a break. You can look to take this trade up onto this next level, and then you can see for reversal patterns and also uh, continuation patterns on these various levels. Okay, so let's see slightly if we can work out something here. Okay, so here we have price just closed below. Okay, though we have some areas here where price will likely want to fill up, but based on the trend of the market, you can see that the market came down here, was trying to create a lower low but failed. Here it took out this high slightly, so we should be looking for more buying opportunities to push this market to the upside. So let's see how it goes. You can get the buy from somewhere around here, then possibly our take profit will be this high, and then our stop loss this low is actually a fair area. So let's see how price reacts to this trade. You can see the market came here and then reacted again. Okay, so if you have your stop loss, your take profit around here, you see that you go through a whole lot of psychological melts before your take profit finally gets smashed. Okay, so that's why at some point I will advise you to have your take profit relatively close to your zones, your key resistance zones, in case of reversal before the zones. Okay, it happens, and you cannot be 100% certain of the market. Okay, so try as much as possible to get your um, take profit levels and stop loss levels slightly above or below zones. Okay, you can see somewhere around here, I was slightly about to get stopped out, but because I saw closely that this was an area of much pressure, I had to place my stop loss just slightly below this low here. Okay, so this is actually a good one, but though it took a whole lot of time to actually get to this target area. In conclusion, top-down technical analysis is a powerful method used by traders to analyze the financial market and make informed trading decisions. By examining multiple time frame of candlestick charts, traders can gain a comprehensive understanding of the market and identify potential trading opportunities. Remember to always use proper risk management when trading. Thank you for watching, guys, and I will see you in the next video.